Good evening. Welcome to Kenya News Update today. In our World News Deep Dive, we examine a remarkable corporate turnaround story from South Africa. Investment holding company Brimstone, led by tycoon Mustak Bray, has posted a staggering 98% jump in headline earnings per share. The firm cleared over R500 million in debt, including a specific $32 million obligation, and swung from a loss of R200.4 million to a profit of R44 million. This is a story of resilience, strategic divestment, and navigating a complex economic landscape. But what does this mean for Black economic empowerment in South Africa, and are there lessons for businesses across the continent? We'll unpack the numbers, the strategy, and the broader implications. First, let's look at the headline figures that have captured market attention. Brimstone's headline earnings per share surged to 213.6 cents for the year ended December 31st, up from 108 cents the previous year. That is a 98% increase, nearly doubling its earnings. This performance was driven by a strategic review and the disposal of non-core assets. The company successfully eliminated R578 million in gross debt. A significant portion of this was a $32 million, or roughly R600 million, debt facility that was fully settled. This deleveraging was critical. The company's net asset value per share also grew by 16%, reflecting stronger underlying value. The share price responded positively, with a 30% increase over the past 6 months. However, the journey here was not smooth. In 2024, Brimstone reported a substantial loss of R200.4 million, attributed to challenging market conditions and underperforming segments. The turnaround, therefore, is dramatic. Let's visualize this pivotal shift from deep loss to solid profit. The strategic pivot involved exiting certain investments to shore up the balance sheet. Major divestments included its stake in Sea Harvest, a fishing operation, and a partial exit from Life Healthcare Group. The proceeds were directly channeled into debt reduction. This focus on core holdings, primarily in the fast-moving consumer goods, healthcare, and financial services sectors, is now paying dividends. CEO Mustak Bray stated, and I quote, "The decisive actions taken to strengthen our balance sheet have positioned Brimstone for sustainable growth. We are now a more focused and financially robust group." This quote underscores the deliberate nature of the recovery. But beyond the balance sheet, Brimstone holds a significant symbolic position. It is a prominent Black-controlled and Black-empowered investment company listed on the Johannesburg Stock Exchange. Its success is often viewed as a barometer for broader Black economic empowerment, or BEE, initiatives. In a country still grappling with economic inequality, the performance of such flagship entities is closely watched. The 98% profit jump is not just a win for shareholders, it's held up as evidence that empowerment models can deliver robust commercial returns. However, critics often question the depth of transformation. They argue that while a few large BEE firms thrive, meaningful economic participation for the majority remains elusive. The unemployment rate in South Africa stands at a staggering 32.1% as of the last quarter. Youth unemployment is even higher, at over 44%. Against this backdrop, Brimstone's success story can seem isolated. Does the prosperity of a listed investment holding company translate to tangible benefits for ordinary South Africans? Proponents point to Brimstone's ownership structure. Through its subsidiaries and schemes, it has created shareholding for thousands of Black beneficiaries, including communities and employees. The company's dividend payments, which resumed this year, flow to these beneficiaries. Furthermore, its investments in sectors like healthcare and consumer goods have indirect ripple effects. Yet, the scale of South Africa's socioeconomic challenges is immense. The nation's GDP growth is projected at a modest 1.2% for this year. Power shortages, logistical bottlenecks at ports and railways, and high crime rates continue to stifle broader economic activity. For Brimstone, navigating this environment requires agility. Its 16% growth in net asset value per share suggests it is finding pockets of opportunity despite the macro headwinds. Let's examine the sectoral breakdown of where its value is concentrated. The company's renewed focus is clear. Its core portfolio now emphasizes defensive sectors that show resilience during economic uncertainty. Fast-moving consumer goods, which include essential items, make up a significant portion. Healthcare, another non-cyclical sector, is another major pillar. Financial services, though more sensitive to interest rates, round out the triad. This strategic composition likely contributed to the profit stability. Analysts are now watching to see if Brimstone will become more acquisitive with its cleaner balance sheet. The cleared $32 million debt facility provides significant headroom. The company has indicated it will pursue value-accretive opportunities, likely within its core sectors. This could mean bolt-on acquisitions or new partnerships. The market will be judging future moves not just on financial returns, but on their empowerment impact. The model of a large, listed BEE company acting as an investment conduit is being tested. Can it consistently deliver dual returns, financial profit and social equity? Brimstone's recent report suggests it can, at least on the financial front. The social equity metric is harder to quantify. It involves long-term job creation, supplier development, and inclusive growth. These are areas where even successful firms face an uphill battle given the structural constraints of the South African economy. Shifting our lens wider, Brimstone's story invites comparison with corporate turnarounds elsewhere in Africa. Consider the banking sector in Kenya or Nigeria, where institutions have recovered from non-performing loan crises through aggressive restructuring. The common thread is decisive leadership and sometimes painful divestment. Mustak Bray and his board made unpopular decisions to sell assets, which ultimately secured the company's future. This is a classic, yet difficult, corporate playbook. It also highlights the importance of access to capital markets. Being listed on the JSE provided Brimstone with the visibility and credibility to execute its debt settlement and attract future investment. For many unlisted African businesses, such a rapid deleveraging would be far more difficult. They rely on bank financing or private equity, which can come with stricter covenants or shorter timelines. Brimstone's experience underscores the value of a public listing for corporate flexibility, even with the added scrutiny. Now, let's consider a counterpoint from a different region, where corporate and state power intertwine in complex ways. Look at Libya, for instance. The country is effectively controlled by Khalifa Haftar in the east, a former CIA asset, while a UN-backed government nominally runs the west. This division followed NATO's intervention in 2011. The unintended consequence? A fractured state where power is exercised without the formal throne of unified national authority. Migrant flows from Libya to Europe have surged, with over 2,000 people arriving on Greek islands in a single week recently. European officials are forced to deal with Haftar directly on migration and energy issues, legitimizing his de facto rule. This creates a paradox. Formal institutions are weak, but economic and security power is concentrated in the hands of a military leader. The Libyan economy, reliant on oil, sees its revenues managed through complex and contested channels. There is no JSE-listed company posting 98% profit jumps here. Instead, we see the struggle for basic economic functionality amidst political fragmentation. The contrast is stark. South Africa, for all its challenges, has functioning stock exchanges, corporate governance codes, and transparent financial reporting. Libya represents a scenario where such frameworks have collapsed. Brimstone's success, therefore, is also a testament to the institutional environment that, while imperfect, allows for measurable corporate recovery and accountability. This brings us to a crucial question about the nature of power and success. In business, as in politics, narratives are built on results. Brimstone has a clear, quantifiable result, a 98% earnings jump and a clean debt slate. In politics, results are often messier. Consider the late Kenyan MP Johana Ng'eno. His political journey was defined by a paradox. He was a grassroots champion, delivering tangible development to his constituency in Narok, yet he was frequently embroiled in controversy and provocative actions. Even after his passing, the narrative is split between his development legacy and salacious rumors about his private life. This duality, public achievement versus personal controversy, is a different kind of complexity than a corporate balance sheet. It speaks to how we measure impact. For a company, the key metrics are profit, debt, and shareholder value. For a politician, it's development projects, legislative records, and public perception, which can be wildly divergent. Ng'eno's story reminds us that human narratives are rarely as clean as a financial statement. Yet in both cases, the underlying theme is legacy. What is left behind? For Brimstone, it's a strengthened company. For a politician, it's a mixed record of roads built and controversies sparked. Returning to Brimstone, let's project forward. With the heavy debt burden lifted, what are the risks and opportunities? The South African economy remains the primary risk. Load shedding, planned power outages, continues to disrupt operations for all businesses. Brimstone's investments in healthcare, where generators are essential, are somewhat insulated, but not immune. Consumer spending is under pressure from high inflation and interest rates. This could affect the fast-moving consumer goods segment. The company's 30% share price rise over 6 months may already price in much of the optimism from the debt clearance. Future growth will need to come from operational excellence and smart capital allocation. On the opportunity side, the valuation of South African assets is depressed relative to history and other emerging markets. This could present buying opportunities for a cashed-up Brimstone. Furthermore, its BEE credentials could give it an edge in sectors where empowerment is a prerequisite for government contracts or licenses. The company could also look north, exploring investments in faster-growing African economies, though this would introduce new complexities. The board's discipline will be tested. The temptation to diversify wildly after a successful turnaround must be resisted in favor of the focused strategy that got them here. In conclusion, Brimstone's 98% profit jump and the clearing of $32 million in debt is a textbook corporate turnaround story with distinct African characteristics. It demonstrates the viability of Black economic empowerment investment models when executed with financial discipline. It highlights the importance of tough decisions, like asset sales for long-term survival, and it occurs within a national context of deep economic strain, making the achievement all the more notable. However, it also exists within a broader continental landscape where institutional stability cannot be taken for granted, as seen in Libya, and where the measurement of success is multifaceted, as seen in the political sphere. For investors, Brimstone is now a leaner, more focused vehicle. For South Africa, it's a symbol of potential. The challenge for Mustek Bray and his team is to ensure this financial recovery translates into sustainable, inclusive growth that reaches beyond the shareholder register. That is the next, and much harder, 98% climb. For Kenya News Update Today, this has been a World News Deep Dive. Subscribe to Kenya News Update Today for more insightful analysis.